All right, hey traders, TG Watkins here. It is March 16th when I'm recording this, and we got about 35 seconds until the market closes, so I figured was good enough to make this video. So we've been seeing a lot of back and forth in the markets. We know we had the issue with the banks and all that kind of stuff, blowing them up, and it did put some pressure on the market for sure. We definitely saw that. But now we're kind of seeing a nice strong bounce, and the NASDAQ is up. So let's kind of run through this a little bit and see if we can kind of take a look at what's going on out there. Two things that I just want to make note of. The SPY is on this trend line. So notice that this has been a resistance trend line for quite some time. There's the bell. And then we had price break over the trend line, and now it is potentially testing it for support. We saw the same thing with the semis back in the day. You can see here it was following the trend line to the downside, broke over it, and then tested it for support. And then you now see where the semis are. And then we could look at this. I believe the Dow was doing the same thing. So the Dow actually, interestingly enough, has this trend line that has been working, and it bounced off of it once, and now it's here again. So it's going to be interesting to see where that goes, but it is riding on top of that upper trend line that used to be resistance. The IWM is not, well, actually, I guess the IWM, I think maybe it was the NASDAQ. So the IWM, for as much as it has gone down, it did break over the downtrending average, and now it is here back at that moving average, at that trend line. So it's interesting to see that it is back there and potentially sitting on top of it. Now, if we do look at the IWM, and of course there are a lot of the small regional banks in there, this is why the IWM definitely got hit hard, but is now the best time to be shorting it? Probably not, because if you look here, we are way outside of that third ATR. And then, we might be getting some sort of double bottom in through here. Now, again, we're not out of the woods here yet. It could take a while for this, say, low to form, or if it is going to break lower, it's going to take some time to break lower because it probably has to recover before it can break lower. So right here, right now, seems like a place like, be careful on the short side. And then if we look at the NASDAQ, check this out. And I think I had a trend line on one of them. Yeah, you can see right here that the NASDAQ has also broken that downtrending line, but it hasn't come all the way back down to it. In fact, what it's done is it has been finding the daily 50 as support. So in this case, it seems as though this might have needed to play a little bit of catch up. Now, there's also another idea out there that, a lot of people are looking at this and saying, oh, this is it with the banking situation. This is the beginning of the collapse. This is the beginning of the second part of the bear market, or this is when things really crash, the economy crashes, recession, all that. It's possible. I don't know yet, okay? But there is the other part of this that now that interest rates are starting to come down, so if we look at TNX, and basically, again, talk about Fed pivot. Now, the idea of a Fed pivot is not for a good reason. If the Fed is having to pivot, then, the economy and things are in bad shape, and that's where we're trying to figure out this tug of war of growth and tech like interest rates to go down. So they're finding some strength right now. However, what is the economy going to do? Because if interest rates are going back down, that means the economy is in bad shape and the Fed is having to fix something. And so what that could mean is the economy, like the bad economy, going to overpower the ability of tech and growth to move up in a environment where interest rates are starting to come back down. So that is kind of the tug of war that we're trying to have to figure out right now. And then if we also look at the TNX, we can see, basically a level here. And in fact, I've been cautious trying to wrap the Moxie indicator and the tools or the rules around the TNX because there's so much macro stuff involved in it, but it worked out. You can see that there was a gap between price and the daily 50, and at least price pulled back to the daily 50 because price should not be over the 50 if the Moxie indicator is below 0. That's an inverse trampoline move. And if we look at the hourly chart, we actually had the Moxie indicator fire right at the time that price was breaking down. I mean, that was right on cue. And we could even see, I think it was like right here, price up, Moxie indicator down, and you had the level and the Moxie indicator continued to move down. So this is why tech is liking this. This is why the NASDAQ is up. So we have to kind of figure out where is this going to go with the economy. Now, if we look at, say, USO, here's another thing that basically says bad for the economy. If oil is starting to go down, which it's been going down, but it's been flagging for a few months. And now here we have an actual breakout to the downside. This implies not good for the market, for the economy, because when oil and energy starts to break down, and actually let me get you over to a higher time frame chart. When oil and energy starts to break down, that can signal that recession and weaker economy is starting to happen. And we can see here that that energy is starting to break down. We could see it back here when price got underneath this moving average on the monthly chart. We could see it was bullish when it got over this moving average, and here we are back underneath that moving average. So, as I said, we've got a lot of cross currents going on. We have the FOMC coming up next week, and 50 basis points pretty much off the table, but now we're wondering about 25 basis points or 0. Are they going to pause? I don't see them turning around and going backwards yet or easing yet. The question really is about pausing or 25. And that's the other thing. What about inflation? What are we going to see about how the Fed is going to handle inflation? How's the market going to be handling this? So they've got their work cut out for them, and we still have a lot of cross currents that we need to deal with. Right now, tech and growth seem to be of interest, probably because of the interest rates going down. However, we're wondering how long can that last if the economy really does go into a significant and strong recession. So, if you want to be bullish in those areas, trade them for as long as you can. We've been talking about Microsoft, and you can see here, just like the NASDAQ, what it do? Bounced right off the daily 50. And you can see there was a double bottom, positive divergence right there on the hourly chart. So, hey, trade these as long as you can. And if the market or if the economy starts to say something else and starts pulling these down, so be it. You get out of them at that time, and then we see where we can go. All right, everyone. Thanks again, and we'll catch you at the next one.
Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.